Well, hello everybody, welcome to Backtesting Workout. My name is Alexander Nikinin. I'm a professional trader and a developer of pattern search software. And in today's video, I want to do the backtest, the market research of dollar yen, 1 hour time frame, and the pattern is cipher. The patterns are drawn by MPS-Pro. Here it is in my indicators. It is the software that I have created. And what are the settings? The minimum size of XA leg is 1 ATR, maximum size is 34 ATR. Then the previous movement should be whatever size, doesn't matter, the movement previous to XA. And the pattern settings are 113 stop loss of a cipher pattern, so that's it. And the medium swing identification algorithm. The large swing identification algorithm was done yesterday. Today I'm doing the medium swing identification algorithm. I already found some trades, 62 trades, and I start the backtesting from 1999, and I'm already 2006. It means I have backtested 7 years maybe. No, it is the beginning of 2006. This means I backtested 5 years already. 62 trades were found. And what is the importance of that backtesting workouts? First of all, when you do this backtesting workout, you train your eyes, you become more and more experienced in that pattern trading. Then, of course, you start noticing some minor things that give you hints when the pattern is likely to work and when the pattern is most likely not to work. And simply you get the confidence, even if you don't acquire any type of experience and type of feeling that will tell you when the pattern is most likely to work and when it is not. You simply can trade them mechanically the same way as the software draws, but you need to have a confidence. You should be confident that the software draws profitable patterns. That's it. So, okay, we will do that backtesting, and I will type the results and you will see how it goes. So that was the stop loss of 33.4. Let me see. Okay, I typed it. That was typed already. Let me check this cipher. We exceeded the C point, but it still may be valid if we don't close below 1414. Yes. Okay, we closed below 127, but 1414 was not hit. So this means that the cipher should be drawn this way, like that. This goes lower, yes, and this goes to new 786 level, yes. So the cipher should be adjusted. Okay, then we just measure the take profit and stop loss. If we stretch Fibonacci from the C point to the entry point like this, and you see price hit that and came back to 382. $32.9 versus stop loss of, let me check it, 36.1. Okay, 36.1. No, it is impossible. 32.9. Yes, 32.9 versus 36.1. 36.1 is the stop loss. It is red, and 32.9 is green take profit. And right now it is a take profit. Not always they are winners. For now it says that only 65% of all trades are winners. This means that how many trades? 35 trades are losers. 35% of trades are losers. Okay, again, it exceeded the C point. Yes, the price exceeded the C point. That's why we are to redraw our cipher, but it didn't close above 1414. And the cipher should go this way, and it should go here. Why it goes here? Because here we have the price action that moves it. It moves, and still valid because it never exceeded once again. And then it triggers the 3786 level of this, and then it goes to the upside. Maybe it triggered the target, maybe not. We will calculate it in a second. Okay, to calculate the target, I need to stretch the fibs from the C point to the entry. This is the C point, and this is the entry. Let me fit the thing. Okay, and it hit the 382. You see it spiked that and reversed. Okay, this is 441 and the stop loss was 477. 477, 441, and it equals to take profit this time. Now let's go back, and within this trade we have some other trades. The first one was not completed, but the second is interesting. So stretch the fibs. The entry was here at this level. The take profit was here. It is 14.0, 28.9, 28.9, 14.0, 28.9, 14.0. It was a take profit as well. Slight bounce to the upside. This one bounced to the upside slightly, and that's enough to close your position. Okay, here obviously we violate our cipher. No need to be checked. Here, this is a potential loss. Pay attention to these large candles. I always pay attention to them. They are warning signs that the reversal may never happen. And this time, what we have, if we go lower, lower, and if we go lower, 116.54.8, 116.55.0. You know, we are 2 decimals of pip above stop loss. We never triggered that. That's why it is a winner. 10.4, 40 and 2. 40 and 2 versus 10.4, and it equals a take profit. Very, very unfavorable risk to reward. 0.25 is very bad risk to reward. But still on this trade. The largest cipher is not valid, but the smaller one, 1414, no close below 1414, and here it is. Let us measure that first from here to here. The 786 was here, so it was that, the lowest one. The cipher should be drawn this way, here, and it goes there. You see? And now let's measure the take profit. It should go to the highest high from our low. Did we hit the stop loss of that? It seems to me we did. The high of this candle says 18,100. Yes, we did hit the stop loss. So I am to calculate the stop loss here. It is called a kiss of death, touch and reverse. 25.2, and the stop loss is 17.3. No, it can't be that. Let me restretch it back. Oh yes, it should be 786, not 886. $22.1, and the stop loss was 24.9. 24.9, 22.1. Very ugly pattern. Maybe I would skip it in real-time trading, but for now, in order to stay objective, we should take each and every pattern that the software draws if it is valid according to cipher identification rules. Okay, another pattern. What we have here is this. The entry was, sorry, the take profit is 9.6, 22.4 is the stop loss. 4 and 9.6 is the take profit, and it equals to this. Okay, continue. No need to measure each side of the move, stretching the fibs, because they are already measured by the software. You see again these large candles through the reversal zone. Large candle, some kind of consolidation of sideways, followed by another large candle. 31.4 and 35.8. 35.8, 31.4. So this was a loser. But of course you could minimize your stop loss after this candle closed. Yes, you could exit here, because, well, it is a loss. The probabilities are for them to be a loss. Okay, nice reaction to the downside, a winner. 25.7, 30 and 2. 25.7, it was a winner. 71 trades done. 65% accuracy. The 66, sorry, and the expectancy is 0.08. It is positive. This means that over time the strategy generates money. Okay, again the cipher pattern was exceeded. The 1414 level was never hit, so it doesn't matter. This is the new C point, and it should be redrawn to the new C point like this, and the entry should be new as well. Okay, now let's measure. This is the C point, this is the entry, slightly lower than the original one, yes. And the, oh, by the way, was it a winner or not? Okay, and again guys, you see that we had high momentum to the upside, consolidation, and then high momentum to the upside as well. If within this consolidation we didn't hit the 382, then when we get out of this consolidation, when we break, when we exceed that consolidation, it is a possibility to get out. So this way you will have only this loss rather than this. This is called cutting losses. Okay, the initial stop loss was 35.0 and take profit was 35.0 and the stop loss was 39.6. 39.6 to 35.0, and it equals to minus this number. Going next. Here's the same situation, high momentum, then consolidation, and then continuation, but within this consolidation we succeeded in hitting the 382 target level. Twelve 1, 21 0, 21 0, 12 1, and it equals to take profit. And of course it may help you if you trade multiple targets. If the consolidation is broken to the upside, maybe you should not stay with your second target to wait for larger movement. Maybe you should close your position at the first target level of 382. Okay, this is obviously a winner. 29.3, 36.5, 36.5, 29.3, and it equals a winner as well. Next, what was this? It was a winner as well. 47.6, 911, 911, 47.6, and it equals to 47.6 as well. Okay, so you see the reversals are typically sharp. It goes straight to your targets. A valid reversal, a valid pattern. It simply spikes your target, like in this case, to the downside, and then it goes to whatever levels. 98, 79, 79, 98, and it equals take profit as well. Guys, you should keep in mind this doesn't mean that it is 98 pips and 179 pips. I'm running a 5-digit broker. The last number is a decimal of pip. It is not. Oh, it seems to me we have a touch in reverse again. 11.31.6, 11.32. We slightly exceeded our entry. Okay, take profit says 59.5, 68.1, 68.1, 59.5, 68.1, 59.5, and it equals to take profit. Well, you see the trading is monotonous. Your homework before trading is even more monotonous than trading itself. So nothing exciting about this, calculating numbers over and over again, and your back is aching, your eyes are aching, and your ass is aching as well. Okay, that was a stop loss. Once again, high momentum bullish candles like this, no reversal. Okay, 55.2, 62.6, 55.2, 62.6, 55.2, and this time it is a stop loss. Let us be honest, if we have a stop loss, it is a stop loss. You can't do anything about the stop losses. 66.6, 2/3 of trades are winners. Only 2/3. No 90%, no 80%, 2/3. And we closed below 1414, so this cipher is not valid. And this one is a touch and reverse. You see how, what was the reaction? Boom, to the upside. 48.8, 57.8, and we should type it 57.8 versus 48.8, and it is a winner. And let's go next. The next cipher is a winner as well, but it slightly exceeded the entry, and that's why our take profit is slightly less than originally intended. 28.7, 55.0, 55.0, 28.7, and it equals take profit as well. Let's go next. What was it? Was it triggered pattern? No, it wasn't. So no pattern here. another trade. You see this, we have point on the market number 1, number 2, number 3, number 4, and point number 5 of this pattern is calculated. It is not taken from the chart as a reversal from history. The software doesn't know if the pattern will ever reach that point. That's why it's never coinciding with the price action. But because the pattern is precise, in majority of cases we see some kind of reversal at that point. Okay, 28.0, 34.1, 34.1, 28.0, 34.1, 28.0, and this time it equals a take profit. So guys, if you see somebody suggesting you the software that also has historical performance algorithms, and the software draws the patterns this way, coinciding with that, or it draws the patterns this way, yes, absolutely coinciding with reversal points, then be careful, guys. Most likely it is absolute scam. You will never know if it reverses. In real-time trading, you never know if it will reverse. What you can do, you can draw your pattern this way, yes, and as time goes by, price either hits your level of this, it either hits your level or it does not hit your level. You see? Okay, so if you see the patterns drawn this way on history, be careful, guys. Most likely it is a scam. Point number 5 should be only calculated point. It should be not taken as a reversal point that occurred in the market. Okay, let's calculate this one. Stretch the fibs. Our entry was this, yes. Take profit was that. 35.1, 44.7, 44.7, 35.1, 44.7, 35.1. It equals winner this time. Because if you know that you have a reversal here and you know where to place your point of your cipher, your completion point, yes, if you know where the reversal takes place, that means that you already know the outcome of the trade. You know that there is a reversal. You know that there is an outcome of a trade. So what it makes pattern trading useless. On history you have 100% accurate strategy, and in real-time trading you have your patterns constantly redrawn because the reversal goes higher and higher and higher. Here it is. We go here, we go here. You see the reversal took place just almost at the stop loss level, yes? 73, 25, 7, 25, 7, 73, and it equals this. Let's go next. Let's go next. Nothing, nothing, nothing. Never completed. Oh, you see that? Boom. Obviously violated. It went very far beyond the C point. And here as well. So the software draws the pattern and it doesn't care what is the next price action. Be it in invalidation, be it completion, or be it a stop loss, whatever. 34.8 versus 601. 601. 34.8. And it equals winner. I had pretty many requests from my customers. Could you please modify your software this way that it doesn't show the invalidated patterns, that I only have valid patterns? And I said no, the whole idea of my software is not based on that. It is not the software that shows you only winners. Okay, we have a candle close below 1414, so this at this second touch. At the first touch we didn't have that below 1414, that's why it was valid, but then we did close below and it invalidated. And here is the same situation. We had some second touch, and at the first touch we didn't close below 1414, but at the second touch we did close below 1414. That's why no need to enter this cipher. Okay, here it is. This second touch triggered the entry and reversed sharply. Exactly the way it should reverse. 53.0, 64.2, 64.2, 53.0, and this time it was a take profit. It is said in Latin, repetitio est mater studiorum. Repetition is the mother of learning. So you simply repeat until it becomes your alter ego, until it becomes your second nature. Okay, you can see that it slightly didn't hit the take profit. In these situations, typically in my real-time trading, when we have 1 decimal of pip doesn't touch, I close that at market if I am near my computer, of course, or at least I do the break even of my trade. But as we agreed, we are to calculate them as zeros. 22.0 versus 25.2, 25.2, 22.0, and it was minus 25.2, perfect. 69%, that's good. 14% is our, 13% is our expectancy. It's not bad, not bad. And we are getting close to what? To 100 trades. And 2009 we still have 9 years ahead. Okay, this is a valid one. And it hit take profit. Perfect. 36.6, 42.8, 42.8, 36.6, 42.8, 36.6. It equals this. This work is absolute must do. You should do it very you should do the very much of that work. Didn't hit that, and then we went to stop loss. The reaction was not as expected, so that's why it only was a stop loss. 51.1, 58.2, 58.2, 51.1, and it equals to minus, because it is a stop loss, this. Perfect. And look again, look at this. The way we triggered with this high momentum bull candle, yes, and then we went to the upside and we didn't exceed the high of that candle, yes, and we started making lower candles to the downside until we finally broke that low here. You see that? So what I would do, I would close my position somewhere on this next second candle, and I would have 12 pips stop loss rather than 58 pips stop loss. You see that? And how I know that? Because of training. I train a lot. Okay, 2 candles to the downside, then consolidation, something like this. This is a true true signal that it will move lower. This is inevitable loss. You can't do anything about that because it went straight. One of those rare situations when it goes straight to stop loss, but you can't do anything about this. 46.9, 53.6, 53.6, 46.9, If you practice a lot and you notice those warning signs, those hints that price action gives you, you can improve your trading and your pattern will become up to 80% accurate. At least you will exit with a small profit rather than with a loss, if you know what to pay attention to. Okay, 25.9, 29.6, 29.6, 25.9. Perfect. This is again a stop loss. The distribution between wins and losses is absolutely random. Okay, I accidentally hit that word. It is absolutely random. You don't know, will your next pattern be a winner or a loss? You don't know it. And it doesn't mean, for example, you have 10 losses in a row. This means that you don't have a higher probability of your next trade to be a winner. You still have the same probability of, what is that, 65%, 67%, 23.3, 26.5, 26.5, 23.3, and it equals to minus this. And if you would listen to some other traders that will tell you, okay, you know what, I have a large hot streak of winners, winner after winner, winner after winner, and this doesn't, I don't know, and this doesn't place me into the state of euphoria because I know that the larger is my winning streak, the higher is the probability that I will face a loser. No, that's not that. Oh, it seems to me we had a winner here. No, we didn't. Let me zoom it in so you will see that. You see this candle didn't hit the entry. If it hit, one candle winner would be very, very welcome. And the take profit is 33.7. 38.8 is the stop loss. 38.8, 33.7. It equals to what? To minus this. So we have a number of losers right now. We have them in a row, 5 losers in a row. Before that, another loss and another winner. We are in a drawdown. This doesn't mean that more losers will have the more probability, will have the higher probability that winner will become. No, absolutely. With 60% accurate strategy, if you do the simulation of randomized outcomes, yes, of 60%, you can easily face 25 losers in a row. 28.0, 36, 37.0, 37.0, 28.0, and it equals winner this time. If you don't believe me, just find the video that is called The Lesson on Probability Thinking on my YouTube page as well, YouTube channel, and I explain the nature of probabilities there. 35.3, 43.3, 43.3, 35.3, and it equals winner right now. Our mind was trained this way that we judge our results based on our previous results. We judge our future results based on our previous results. And if we had some losses in a row, we automatically start thinking that something goes wrong. 21.9, 38.6, 38.6, 21.9, and it was a take profit here. And when we start thinking that something goes wrong, this means that we are making mistakes, and if we are making mistakes, we have to fix these mistakes, and we start looking for the mistakes that don't actually exist. The nature of probabilities says that if you have 65 winners out of 100, this means that you inevitably have 35 losses. 20 and 5, 27, 2. 2, 20 over 5, and it equals winner as well. And without those 35 losses, you don't have those 65 winners, and you can easily hit those 35 winners in a row, and then you hit those 35 losses in a row, and then you hit your 65 winners in a row. 11-3, 29-1, 29-1, 11-3, because you don't know when the win comes, when the loss comes. It equals. But what you know that out of 100 trades, out of 1,000 trades, or out of 10,000 trades, the larger is the number, the more precise is your the larger is the sample, the more precise is your number. Probability is more precise. Okay, so what it means: 23-6, 46-6, 46-6, 23-6, and it equals winner as well. Perfect. Now you see we have some winners in a row. They never come in this streak. One winner, one loss, one winner, one loss. We have a streak of losses, streak of winners, and you never know when this streak will end. So if you think that having 5 winners in a row, the next trade will most likely be a stop loss, and that's why you don't enter that, this is a mistake. You risk to miss a pretty good opportunity like this. You see that? We had 5 winners in a row already, and now winner number 6 comes. 88, 1009, 1009, 88. And what is the probability of next trade to have the same outcome than the previous trade? If I explain it to you, our previous trade is the winner. So actually what I'm asking, my question is, what is the probability of the next trade to be the same? This means to be the winner as well. What is the probability, rather than to be opposite, rather than to be a loser? As I had 1, 2, 3, 4, 5, 6, 7 winners in a row already. So what is the probability of next trade to be a winner versus being a loss, to be the same? So the probability is 50%. It either will become a winner or a loss. And this time it is a loss. But it could be a winner very, very easily. Okay, so what is it? 34-4, 39-7, 39-7, 34-4, and it equals minus 39.7. Okay, good. So we have 67% probability out of 100 trades. We know that 67 are winners, 33 are losses, but we have those 33 losses, and those 33 losses may come in a single streak, and after that you have 67 losses. Maybe you will never face that, but this possibility is absolutely possible, that you have all your losses in a row and then you have all your winners in a row. It is possible. Okay, this was a loss, and look at this. $28.9, 33.3, 33.3, 28.9. 28.9, and equals to minus 33.3. Okay, now we have 100 trades because one of them is not. Okay, invalidated. You can see invalidated, goes too far beyond the C point, invalidated. Okay, this large candle, boom, brings a stop loss. You should also keep in mind these situations when we have it here, then the whole pattern is a correction, and then the underlying trend continues. 20 and 8, 23, 8, 23, 8, 20 and 8. Perfect. Now we have minus. Okay, 65.69, 65.69. Okay, let me do it this way. I will copy this formula to the downside as we are moving more and more and more. So let them be copied. You see, 103, 104, 105. This is the number of trades. Now let's continue. Okay, perfect. 2011. We're getting closer. Oh, look at this loss. Nothing could prevent from this loss. This was perfect. And look at how small this pattern looks, yes? When we have those candles, the pattern looks very, very small. 10, 7, 12, 5. 12, 5, 10, 7, and it was a loss. And once again, guys, you see we already have 4 losses in a row. After 7 winners in a row, we have 4 losses in a row. I had a study of those probability stuff. So what is more likely? That we will have losses in a row, we have a streak of losses, 2, 3 or more, or we will have single trade, single winner, single loss, single winner, single loss. What is that? Distribution probabilities. And I found that it is absolutely 50%. We will either have a streak or a not streak. 81, 18.5, it is a winner. 18.5, 81. So what is a streak of winners? This means that your current outcome is the same as your previous outcome. This is the streak of winners or a streak of losses. And what is not a streak of winners? This means that your current outcome is opposite to your previous outcome. Okay, 15.2, 17.7. So we had slightly pausing. We had losses in a row. One retracement to the upside and another loss to new equity lows. If we are downtrending, I will draw a potential equity curve. Okay, here it is. Come on. 48.2, 48.2, 55.8, 55.8, 48.2, and it is a winner. Next, once again, consolidation, break to the downside. 321 370 370 to 321, and it equals minus this. Now we have win-loss, win-loss, win-loss. No streaks at all. Okay, let me check if this pattern was invalidated. 1414 candle closes this one. Yes, it was invalidated on that next movements. Invalidated. This one is a valid pattern, but it is a stop loss. Calculating 27.0, 31.0, 31.0, and 27.0, and it equals to what? To minus this. Now we have a streak of losses. 2 losses in a row gives us a streak. And this streak ends here. $25.5, $35.4. Oh, no. 35.4, 25.5, and it equals what? A winner. The expectancy turned into 0.06. This one never completed. The bull cipher never completed. Never completed. The small one, it looks like a valid, and it hit some targets. $33.6, $62.4, $62.4, $33.6, and it equals winner. Now we have a streak of winners because this one is the same as the previous one, and here it is. We have another trade, a larger cipher. Yes, if we go here, this is the larger cipher. It goes higher and higher and higher. Let me see where it goes. It goes directly to stop loss. I am to measure it this way, and it is very large. 1649 versus 1889. 1889, 1649. This means 188 pips of stop loss, and it is minus. Well, if you trade percentages, it is still 1%. It doesn't matter what your stop loss size. But if you trade fixed position size, then maybe you should have a limitation of your largest stop loss. Don't trade the patterns that have a stop loss more than 100 pips or whatever. You should have a rule for your maximum stop loss size. Okay, that was a winner here. After the second test of your entry, it hit targets. 16.2, 31.2, 31.2, 16.2, and it equals a winner. Didn't trigger. Okay, that was a stop loss. $208, 28, 23.8, 23.8, 20 and 8, and it equals a loss. Perfect. And this one, which one? This one. Looks like a winner. Let me zoom it in. Zoom it in back. Didn't trigger. Did trigger on this candle. You see that? And it is 25.7, 29.7. 29.7, 25.7. It equals a winner. Perfect. What is this? It is a stop loss, obviously. Without stop, goes to stop. Price action. 23.0, 26.5. 26.5, 23.0, and it equals to minus this. Going next, didn't trigger. Maybe invalidated, but I'm not sure. Let's go. 1414. No close above 1414. You see that? This is perfect. A perfect pattern. It is a valid one. So it should go this way. This one goes here. And this one goes here. Let's continue and calculate the entry. You see that it triggered here on this spike to the downside, like that. Perfect. Spike to the downside and immediately went to the upside. That was a winner. Okay, 43.0, 41.6. 41.6, 43.0, 41.6. No, it should be in reverse. 43.0, 41.6. Okay, it was a take profit. Another winner. Ooh, nice. $31.6, 57.2, 57.2, 31.6, and it equals to winner. Not this one. Sorry, it equals to a winner of that. If you notice, this equals to that, but I need this column for further calculations. Let's go lower, place it here. 2014, 3 years left, almost there. Let me check if it was invalidated. Most likely yes. Yes, it did hit the 1414, exceeded 1414. But this small is very perfect. $314, 312. Okay, it was touching reverse. 12.6, 14.5. 14.5, 12.6, and it equals to winner. Next one is a winner as well. And it is 15.0, 18.0. 18.0, 15.0, and it equals to winner. And next one, where is the next trade? Is this a 0 or is this a winner as well? Could be. Let us see if we don't close above 1414. No, we do not. So this is the trade. The triangle should go here to fit the extreme, and it should go here, yes. And price action went to the downside, and it didn't hit the 382 level. You see it went lower and hit the stop loss. Okay, so the entry is this low of triangle. $45.3 to 505, 505, 45.3, and it equals minus to this because it is a stop loss. No, didn't trigger. Okay, this one is validated for me. And this one closing above 1414, not valid. But this one triggers, obviously. Nothing, no doubts. Nothing should be checked. 26.9, 33.9, 33.9, 26.9, 26.9, and it equals to this. Okay, good. Now let's go. Oh, this consolidation period brings multiple patterns. One cipher triggered here, and then it went lower, and then it hit targets. Perfect. 27.9, 38.6, 38.6, 27.9, 38.6, 27.9, and it equals to take profit. Then go here, and this is obviously a stop loss. No doubt. $29.1, 33.5, 33.5, 29.1, and it equals to minus this. Let's go next. Nothing here, but this may be triggered. Maybe it did trigger. No. And then it exceeds. So why I treat that as invalidated? Because it invalidates B point and then it invalidates C point. That's why it is invalidated. Although it may be less than 1414, but the fact that it first invalidated the B point, broke the B point, and then it exceeded the C point. This fact invalidates the pattern. $19.023.6. This is a winner. Nothing here, no triggered. No, this one is potential stop loss, but we need to check it. Price went higher and higher and higher, and here we could have a graceful exit, but let's calculate it as it is. Come on. Okay. 26.7, 13.4. And it equals to minus 13.4. This trade generates minus 13.4, but next trade is a perfect winner, and it generates 37.4 and risk 55.2. 37.4, it equals to take profit, and we have 64% accuracy, 64.29. Another pattern. Okay, it was a stop loss. Potential target was 54.9, 63.2, 63.2, 54.9, 63.2, 54.9, and it equals minus this. Perfect. Let's go next. Oh, I don't think we triggered, but who knows? We could trigger that. No, we didn't trigger. The first pattern didn't trigger. The second one, was it invalidated? No, it does not didn't close below 1414. So this means we should treat the pattern this way. From here to here, you see it triggered here, slightly lower. This is our entry, and this is our target. Okay. From here to here is the 37.7, 45.0, 45.0, 37.7, and it equals to winner. Perfect. Okay, this one is a stop loss, a flag pattern, 18.2, 21.6, 21.6, 18.2, and it equals a winner. 2015 November. Okay, obviously we close above 1414 this way. Yes, yes, we closed. So it was invalidated, didn't trigger. This one was a stop loss. Large candle warning sign, could be a graceful exit, or maybe a cancelled trade. 55.3, 63.0, 63.0, 55.3, and it equals to minus that because it is a stop loss. Didn't trigger. Oh, this small pattern here, look at it. Okay, triggered and hit targets. 22.2, 26.8, 26.8, 22.2, and it is a winner. Okay, done. Refresh rates. Let me see if this was first invalidated, and then I will tell you if I enter this or not. 127, it was not invalidated, so it should be entered from here, and the entry was here. and it was a stop loss. Let me stretch it this way. $36.0 to $39.4. $39.4, $36.0, and it equals to this. Okay, perfect. Minus. This one is a good winner. Okay, let's go to the next one. And the high says 107.084. 0.85 is the level, then we go lower, and now we finally hit the targets. 19.1, 52.9, 52.9, 19.1, it equals the take profit. And let's go to the next trade. What is this? It triggered. Whoa, you can see that. 25.1, 28.9, 28.9, 25.1, and it equals take profit. Another trade here. Look at this. Okay. It should be calculated first this way. We know that it should not exceed 1414, so this spike to the downside didn't. Then we have to find the entry of 786. Well, it doesn't change very much because it exceeds the C point by a few pips. Okay, so let it be this way. It should be slightly lower, somewhere here. Okay, and it was a winner. Slightly lower, 1 pip or something. 14.2 versus, let me make it this way, 14.2 versus 34.2. 34.2 versus 14.2, and it equals to winner. It equal to winner. Obvious loss, stop loss, here is the take profit, 39.2, 44.7, 44.7, 13.92, it equals to minus this distance. Okay, nothing triggered here. We go higher, another stop loss, 2016, August. Almost there. Okay. And it equals to 36.1, 41.2. 41.2, 36.1. Okay, equals to minus this. Going next, this is the next trade, goes lower, lower and lower, and finally reverses. It is 27.1, 56.6, another winner, 56.6. 27.1, and it equals that. Take profit. Let's go next. What is it? Okay, these two ciphers, the first one is invalidated, of course, but the second one, the highest clause say 11.7.78.5, it touches 1414, well, invalidated. The pattern is invalidated. This one, pay attention to it. It didn't trigger, and then it went straight to stop loss. Okay, what is it? 47.9 versus 54.7. 54.7, 47.9, and it is a stop loss this time. Done. Going next. The small pattern didn't complete, but the larger one, look at that. Goes here and then it goes there. Take profit, taking profits, and then it reverses. 48.7, 98.5, 98.5, 48.7, and it equals to take profit. Done. Going next. This is a perfect winner. I like it. Look at this. Yes. The entry is this. Take profit is 39.5, 48.0. 48.0, 39.5, and it equal to take profit. Another winner. Oh, and here we have it this way. It gapped through the entry. If I type it as a gapping through entry like this from here, this the trade was opened here actually. Then it will be a bit not objective. Okay, let us calculate it from here. From this entry, 21.3 to 33.1, 33.1, 21.3, 33.1, and it equals to take profit. We have a gap as if some information is missing. Maybe we had some weekend or whatever, but some brokers don't have weekends, and you could execute that at exactly the same price. So that's why I created the situation when we have a worst case scenario, not the best one, but the worst. 39.3, 49.2, 49.2, 39.3, and it equal to take profit. Perfect. Now we have 4 take profits in a row. Pretty cool. Nothing. This one is a stop loss. And the distance 16.3, 18.8, 18.8, 16.3, and it equal to 18.8. Nice. Going next. 127, 1414 was not exceeded. So we have to restretch our Fibonacci's, and look at this. We violated the B point here, and then we came back to violate the C point, and as we didn't trigger the 786, this trade was invalidated. Okay, a perfect winner here. 32.9, 40 and 8. 32.98 equal to that winner. You see how spiked through the entry, and it began moving to the downside, even gapping to the downside. 32.5, 32, 32.5, 32, 38.2, 32.5. This one is a winner. Targets are always lower than stop loss within cipher pattern framework, so they can be no situation when it is larger. This one is a loss, and it is 34.2, 39.1, 39.1, 34.2. Equals to minus that. It is a stop loss. Okay, this cipher first. Let's check the C point, and it seems to me that it is okay. Then let us redraw the cipher because of new information, new chart information. Stretched here and goes here. Yes, so our entry is the end of this triangle. And we hide it this way to this way, and we hit 382 target. The entry is the triangle, slightly lower than the initial one. Yes, 22.2 versus 27.1. So 27.1, 22.2, and it equals the take profit. $64.86 is the probability of this pattern to win, and it's not yet over. No, here. Okay, we triggered here, and it is 22.7, 34.4. Let me type it. 34.4, 22.7 equal to take profit. Going next. Going next. Here it is. Potential stop loss, but who knows? There are spikes maybe triggering the take profits. No, it didn't. Not enough. So it will be calculated as stop loss. 16.6, 19.1, 19.1, 16.6, and it equal to what? It equal to minus this. 150 trades already found. Pretty good sample size. It is not 20, it is not 30. It's not even 100, it is 150. Okay, this didn't trigger here, went further, and it was obvious as stop loss. $15.2, 17.5, 17.5, 15.2, and it equals to take profit. didn't trigger. Sorry, it equals to stop loss. It equals to stop loss. Okay, this one didn't trigger. Didn't trigger. Okay, that's it. The backtesting is done. The market research is over. Let me switch the automatic algorithms into manual, so it will not redraw these things until I want to draw them. Let me close it. Now let's go to have the calculation results. Control Shift downside here. Okay, what do we have here? We have an expectancy of 0.08, 34.24 is the percent of win. Average win is 0.68 because it is less than this. And also I have calculated, based on the risk to reward, we can calculate where the price exactly reversed. So this is my risk to reward. If it reversed at 786, then the risk to reward is 0.872826, and vice versa. If it is 0.872826, then the reversal took place at 0.786. And in each and every situation we have its unique reversal points. And this column is the frequency column. How often we have, how many patterns we have reversing exactly at 786, 787, and so on and so forth. So let's build a graph. Here's the graph, and let us see how often it reverses from that level. And you can see that the most often reversal, let me format that axis so you can see it. Come on, okay, Control X, going higher, Control V. So you can see the chart here. The most common reversal is exactly at 786. You see that? It is the most common reversal. Then it goes very, very close to each other, very, very close to each other. Then we'll have some gap. No reversals starting from 0.90 something. And then again we have some reversals, and then after we hit 1, you see that 1, let me stretch it, 1, after we hit 1, this is our 1. They are very, very seldom. You see, they aren't very close to each other as we had them here, and they are very, very seldom, and they are not very large. Okay, so this means that after we hit 1, we have very, very small probability of price to reverse. So what if we place our stop loss exactly at 1 rather than we reverse exactly at rather than we place the stop loss at 113. Okay, and to calculate this, well, watch my previous video, you will see how it is calculated. I will not record it. I will not do it right now. Okay, I promised to you to build up a graph so you can see how it generates money, and it generates money this way. This is the line chart. Pretty cool, moving without very large drawdowns, moving, trending to the upside. So this way, dollar yen medium works. And if you compare it to dollar yen large, here's the chart for dollar yen large. Look at this, how it works. It works a bit different way. You see that? So dollar yen medium is much more smooth rather than dollar yen large. Dollar yen large is kinda sideways moving. Okay, that's it about the cipher pattern trading. The conclusion is that dollar yen moves a bit better. And let's let's compare the numbers. The expectancy of this is 0.08 and the expectancy of this is something is wrong with this chart. Oh, I forgot, I did it differently. I already have new expectancy. The old expectancy was that 0.006, almost 0, and this is the new expectancy, is 0.11. I have to change these numbers as well. 0.11, and this one is what? 51.43, and this one is 113. Okay, now they are here. Perfect. And I am to type old. 0.08 is my old expectancy. I will type it here. Then I will place my stop loss from 113 to 1, and I will calculate what will be the outcome, and it will be a bit different. So if you compare the dollar yen large, using old stop loss at 113, it is 0.0006, yes, and using stop loss at exactly 1, it is 0.11. You already can generate something here, and this is very important. But with medium swing identification algorithms, it's even better. We have 0.08 from the very beginning without any improvements. But if we improve, that will be a very interesting situation. Okay guys, this video turned into a bit a long one, and I am to finish it. If you like this video, please share it with your friends, and you are welcome to visit my website www. This is my website ps-software.net, ps-software.net, and you will find my software there. You will find the tutorial, you will find the demonstration of that software, and you will also find all the rules absolutely for free, how to identify the patterns manually if you don't want to use the software, if you don't want to use that automatic approach that I use, the mechanical approach, but you only want to learn the patterns and trade them manually, you are welcome, and it will be absolutely free. On my website you will have that trading course absolutely free. Well, until then, good luck and good trading. Hope to see you soon.